Good morning, everybody. Hope your evening went well. It was kind of nice here in Wichita. It was about 80 degrees, give or take a little bit, and we actually got some rain in the form of showers. That'll boost the humidity when the close to 100-degree temps return tomorrow. So it is summer. It is that time of year to enjoy the out of doors. And with that, sometimes temps are 100 degrees or higher. So uh, I enjoy the four seasons myself and hope you do too. Okay, the stock market selling that began yesterday in the United States went round the globe except for China. And China's market was just kind of sideways, up just a little bit, not by much, basically unchanged. The news out of China overnight showed that their business sentiment indicator fell from a plus 50, above 50 to 48. I believe it was 48.3. And again, if the economy is ultimately a state of mind, and I do think that it is, the economy is really based on the willingness of people to forego $1 today for possibly $1 plus sometime in the future. This doesn't bode well. There was a survey out yesterday also on the American sentiment towards the economy, and some 50% think that it's getting worse, not getting better. There are more children in poverty today than there were when Obama took office. The median income is back to where it was in the mid-1990s for the average family. So there's a lot of unease out there, and that tends to make people hold on to dollars. It'll be interesting to see if the Fed said there's going to raise interest rates, and that because they've said it so many times, they probably will. But to see what that does to the stock market. And one of the things that's been pretty clear, that when the stock markets start to sell, who is the ultimate buyer? It's the Bank of Japan. It's the People's Bank of China. I'm sure if things really get ugly and start to go down, the U.S. Treasury will be the buyer of our stock market too, and trying to at least mitigate the selling if and when it begins. 2016 is a presidential election year. That in and of itself could hold our market up, but at some point after the 2016 elections, if a correction is going to happen, that's when you'd most expect it off the presidential cycle. So here we are. I think the biggest dynamic driving the financials is option expiration. All the volumes in the 10-year, and the 10-year favors a close between 126.16 and 125.16. So mathematically that would make the close on Friday 126 even. And we're going to play for that. I just see kind of a trading range unless the bottom falls out of the stock market. So our first sell is going to be 11 to 15, followed by 19 to 23. We're at 7.5 right now. The last rotate up stopped at 9.5, 10. So it might take a lower sell to get in, but we're going to start out that way. We've got volume at 1.5. We've got volume down here at 29. So I'd like to buy 29s to 01. But if the stock market's selling, it's going to be hard to get in for less than 5. So we'll put a question mark at 5, and then 21 to 25. So as we jockey into option expiration, we expect the market to trade between support and resistance, and I think come Friday we'll be playing for a close at 126 even. Today's news, FHFA, housing price index plus 0.4. The housing estimates for prices have come in pretty much on target. The permits, starts, and existing home sales, pending home sales have come in higher than forecast. So they're looking for 5.4 million in existing home sales. That number could come in higher than that. Back in the boom times, that number would have been north of 6 million. When things get pretty slow, it's less than about 4.5 million. And then crude inventories at minus 1.7. So the news focus today will be existing home sales. And the direction of the Emini is going to tell the tale of today's tape. So I expect a trading range. We'll play it as such. Hopefully we can get a sell off 11 to 15. Might have to come in a little bit. But that's where we'll start the session out. I'd like to buy against the buck. If the Emini sells, I will have to pay. We'll have to pay up to get off a long. Okay, looking at the 30-year. Similar situation. The option expiration is 151 as it tightens up. 154. Right now we're having a real hard time at 53. So mathematically, a close would be 52.16. And that's where we are right now. We got this low volume area up here at 53.07 to 53.03. So 53.04, 53.08 is pretty good resistance. Obviously, you got to get through the buck to get there. So 23.27, sell 1. 3 to 7, sell 2. On the buy side, we got volume at 10. We're currently at 17. We've got volume at 5 or 6. And then volume down at 27. So the high volume number is quite a bit below us. We've got a break at 07, so we're going to lean against that low volume number, 5 to 9 by 1. And then 25 to 29 by 2. We'll pick up this area right here. Put a long article in there on gold. Really difficult to understand what the point of the article was when it was all said and done. But they're really trying the decline in the price of gold to deflation in the world's economies and the strength of the dollar. And they showed several different economies. So deflation really is what might be the longer term force that's driving the markets. And we've talked about that at length. We've always thrown that out there as a possibility. Gold, when we left last night, we were hoping to sell the 5 to 7 area. Had a hard time at 1100. So our next support area was 85 to 87. And I'm on the wrong chart here. So 1100 basically held. Right now we're going down and we're getting down into these single prints again. So our first little band of support down here is going to be in this 85 area, give or take. So 80 to 85, that's where the selling was the other night. I'm going to put an 80 to 82 by 1. New lows 75, 77. And that's on the assumption that we can get through 85. We'll put a question mark at 85. On the sell side, 90 to 92, pretty aggressive. We're going to lean against that high volume number. And then 95 to 97, we'll pick up these single prints. And you can see the selling started in Asia. And that's where it started the other night. Also put a long article up about the flight of assets from China and the selling of treasuries. And why would China be liquidating their reserves? If they built it up for a rainy day, they would be liquidating it because this rainy day has come in and their economy is coming apart at the seams because it was financed on debt. And we've read of stories for years of these see-through buildings where a lot of them aren't even glazed or finished anymore. There was an article out a couple of days ago about the basements or the foundations of large skyscrapers were now tilapia farm ponds. And so again, China has to employ or find employment for 25 million new people a year. They really like the manual labor, the hand assembly. But Vietnam and other places around the globe are cheaper producers now. China the last couple of years has raised their compensation to their workers 30% per annum. So they're no longer competitive on that real cheap labor anymore. And that means that they've got to have a middle class. That means to have a middle class, you have to protect their assets. So liquidation of U.S. treasuries and other things that they built up makes sense in that context. So gold is pointed lower, and I don't see any changes in that. We've been bears on gold for quite a long time. Not because we had any particular insight into the markets, just that we could read the F1 and F2 screens, and we don't have to know who, we don't have to know why, we can just see that they are selling. And that makes it pretty easy from an analysis standpoint. We've had a big B over here. We definitely have a B in the overnight session. We're pointed lower. In the oil patch out here, cash crude is below 50 bucks, went below 50 bucks 2 days ago. So $50, I think we're going to take it out. So the first stop I see is 49.50 to 49.75. We'll put a question mark at 50. We've been expecting at least a run on stops below 50. Actually, let's make it 49.25, 49.50. And then 48.75, 49. On the sell side, 50.25, 50.50. Then 50.75, 50.71. So I think that we're going to get that run of stops below 50, and we'll have to see how low it takes us. Okay, more stories out about next year. The grease problem will reemerge. And again, what we're seeing is delay, kick the can as far down the road, delay payments, keep the payments as small as you can, only when desperately needed. And that's the game that politicians play extremely well. Not going to hold me accountable if it did happen while I was in office. You won't remember my name anyway. You might remember the premier, but you won't remember me. And all these guys think that they are untouched. They can't be touched by this. And I think that's where the disconnect is. They really see themselves as outside of, the normal life or life conditions that most of everybody else has to go through. Otherwise, they wouldn't be voting or legislating this stuff in. Okay, looking at the euro right now, we got a seller against 50. So 45, 55, sell one. Then 75 to 85, allowing them to get stops up there will be sell two. I think we're headed down, so 109 even. It's a round number, buy one. Then 875. This market tends to go to the 75 handles. I think the 75 area gives us a little chance, at least for a rebound to the buck. Okay, the Emini, the selling continued. The Emini took every other market around the globe down with it yesterday. We are the dog. The rest of the markets around the world are the tail. And the selling appears that it'll continue. So stops below 2100 are minimum. So this 85 to 95 area I think is probably reasonable support to get started. So we'll put a question mark at 01, but we'll make 95, 97 by 1. And bounce it back, get a retest at 2100, and it starts down. It gives us a little wiggle room, and then 90 to 92 for buy 2. 3.5 last, so 5 to 7 sell 1, and 9 to 11 sell 2. So see pretty good resistance at 5 to 10 and pretty good support at 90 to 95 starting out, but I do think the market is a sell, which means that we've got to get our shorts off quickly, and we'll probably have a pretty time to get long. And the key is going to come from pane number 3 on our F4 screen. And taking a look at that right now. For those of you that are new to the room, this really defines where you can see where the support's going to come and where the Fed is intervening. And when the market's in a heavy selling that we've seen several times, if this 50-lot trader is buying every lower tick, that's the Fed supporting the market. This is also where the buying power comes from right off the opening. And the Fed doesn't mind the market selling, they just don't want the bottom to fall out of the market. And the Fed is pretty content that we've got a trading range now of say 2025 to 2125. And if they can hold the market in that range, they'll be there. So I think we got to play for stops below 2100. I think we can go lower than that, but we'll have to see what happens at 2100, and the key is going to be off of this pane right there. That's all I have for right now. We'll get after it as soon as I can get everything up and posted this morning. Be back with you as soon as possible.